PG&E Corporation, Equity Research Report Date, July 13, 2025. 1. Basic Overview. Metric Value. Company Name, PG&E Corporation. Sector: Industry Utilities, Electric Utilities Market. Capitalization: $29.49 billion. Current share price: $13.42. 52-week high, low $21.72. $13.34. Exchange: New York Stock Exchange. Key highlights: PCG operates as a regulated utility via its subsidiary, Pacific Gas and Electric Company, serving Northern and Central California. Trades near 52-week low, underperforming S&P 500. 2. Business model and operations: generates electricity from nuclear, hydroelectric, fossil fuels, and renewables. Distributes electricity, natural gas, to approximately 1.6 million Californians. Owns 140,000 plus miles of transmission, distribution lines, and natural gas pipelines. Revenue streams: source breakdown: residential, approximately 40%. Commercial, approximately 35%. Industrial, agri, approximately 25%. 100% domestic. 3. Key financial metrics: valuation and profitability. Metric value sector: AVG PE 12.31x, 18.0x, PE 8.94x, 16.5x, PB ratio 1.01x, 1.5x, dividend yield 0.72%, 3.4%, ROE 8.26%, 9.5%, debt to equity 193.84%, 130%. Growth and efficiency: revenue $24.54 billion, net profit margin 9.58%. 5-year revenue growth minus 2.3% CAGR. EPS $1.09. Liquidity and leverage: current ratio 0.95. Total debt $59.97 billion. Cash reserves $2.02 billion. Levered FCF $5.1 billion. 4. Balance sheet strength. Item value: total debt $59.97 billion. Cash reserves $2.02 billion. Net debt $57.95 billion. Book value: share $13.24. Free cash flow trend: persistently negative due to wildfire safety investments. 5. Management and shareholding. Key executives: CEO Patricia Kessler-Pop, CFO Caroline J. Burke. Ownership structure: holder type percentage: institutional 97.17%, insiders 0.19%. Governance: ISS governance score 1/10. Competitive analysis: main competitors: Southern California Edison, Sempra Energy. Competitive advantages: regulated monopoly, captive customer base in critical California markets, infrastructure scale, dominant transmission, distribution network, renewables, transition, nuclear hydro assets support decarbonization goals. Moats: high entry barriers, capital-intensive infrastructure and regulation. 7. Valuation analysis, relative valuation. Metric PCG sector, AVG. Verdict: PE 8.94x, 16.5x undervalued. PEG ratio 0.78x, 1.5x undervalued. Price sales 1.18x, 2.0x undervalued. Analyst sentiment: target price range $16 and $19. Ratings: 60% hold, 30% buy, 10% sell. 8. Growth prospects. Catalysts: grid modernization, $2 billion year investment in wildfire hardening. Renewables expansion, targeting 100% renewable energy by 2040. Rate hikes, $1.3 billion per year pending approvals. 7. Industry tailwinds: California's 2035 EV mandate to boost electricity demand by 20%. 9. Risks: risk type description, regulatory, legal. Wildfire liabilities $30B plus pending claims. Debt sustainability: $59.97 billion debt. 193.84% DE ratio. Limits flexibility: operational aging, infrastructure, safety incidents, dividend uncertainty, low yield versus sector. Payout ratio 6.42%, Final summary and recommendation investment thesis. PG&E trades at a discount to peers due to debt and wildfire risks. Its regulated monopoly provides revenue stability but balance sheet stress, and execution risks in grid modernization warrant caution. Recommendation. For defensive investors, hold. Pros: undervalued versus sector critical infrastructure role. Cons: high leverage, weak liquidity, and regulatory overhangs. Entry point: $14. Share with monitoring of debt reduction and rate case approvals. Long-term outlook: moderate growth post-2026 if safety investments reduce liabilities. PCG's valuation discounts its near-term risks, but successful execution of safety upgrades could unlock upside.